Hello everyone, welcome to my channel about making money online. On this channel, I share my daily work life in a casual live blog format and share various strategies that I use to work like this without leaving home. Today, I'm going to use a fairly simple strategy that I've already tested. And today, I need 3 indicators. I can work with this strategy on absolutely any charts. That means it can be OTC charts, it can be currency pairs, it can be cryptocurrencies, or it can be stocks of some companies. I'm just going to show you how I set up the chart and how I work with this strategy. So, as I mentioned earlier, I'll need only 3 indicators. The first indicator I'm going to use today is called Super Trend. I add it to the chart, then I go into the settings, and here I increase the period to 12. And in the second field, I enter the value 2.5. I don't change anything in the style, I leave the default settings, and then I press the Save button. The second indicator I will need today is called SAR. I also add it to the chart. Here I go to the settings, and in the settings, I use the value 0.02 in the first field and the value 0.2 in the second field. So basically, I use the default values that I have here, and essentially, I set up this indicator at the time I set up the chart itself. But we'll talk about this a bit later. Also, I change the color of this indicator and make it a bit thicker just to make it more noticeable. And the last indicator I will need today is the one called Zigzag. I add it to the chart, go to settings, and in the first field, I set the value to 6. In the second field, I set the value to 10, and in the third field, I set the value to 2. After that, I press the Save button. And basically, with that, I've finished setting up the indicators. This is the configuration I use, and now I need to set up the chart itself to receive suitable signals. Today, I will be opening 1-minute trades, so I need to adjust the settings to open 1-minute trades. So I set the candlestick chart type. When working with this strategy, I always use candlestick charts and I calculate the candle time frame as half of the trade duration. So since today I will be opening 1-minute trades, I am using a 30-second time frame. If I wanted to open, for example, 30-second trades, I would use a 15-second time frame. And if I wanted to open 2-minute trades, I would use a 1-minute candle time frame. So the logic here is like this. Then I immediately set 1 minute for opening trades and set the amount to $300. Today I will use $300 as usual. I'll explain why a little later. With this, I finish setting up the chart and can move on to opening trades and explaining the strategy. But before that, my friends, I remind you that in the pinned comment, I left a link to this platform that I am currently working on. On this platform, after creating an account, a completely free demo account becomes available, where you can test this strategy or any other strategy. You just need to sign up and the demo account will be immediately accessible. It's almost identical to the real account. It has the same features, so you can practice on it. Now I will explain the strategy. So, how do I work? First, I open absolutely any chart and look at the indicator called Super Trend to see which signal is currently active on the chart. In general, Super Trend gives 2 types of signals. It can either be a buy signal, which looks like this green one, and as long as the green line is drawn, this buy signal is active. Or Super Trend gives a sell signal and then it draws a red line like this. For example, there is currently a sell signal on the chart. Well, I think, by the way, a new buy signal will appear soon, but nevertheless, the last signal was a sell. And accordingly, if I see that the sell signal is active, then I consider a situation where I can enter a down trade. If I see that there is currently an active up signal on the chart, then I consider situations in which I can enter an up trade. Well, for example, a new buy signal has just appeared, and accordingly, now I look to see if I can enter an up trade on this chart. Next, after the Super Trend indicator, I look at the SAR indicator. This indicator lets me understand in the short term where the chart is moving right now. If the SAR indicator draws dots below the chart, it means it's showing that the current movement is upward. If it draws dots above the chart, it means the current movement of the chart is downward. So, for me to enter an up trade, I need these dots to be drawn below the chart. If I want to enter a down trade, it's important for the dots to appear above the chart. If after receiving the signal I go through this verification stage, then finally I look at the zigzag indicator. In order to enter an up trade, I need this yellow line to be pointing upwards and to be on the last candle. To enter a down trade, I need the zigzag indicator line to be pointing downwards and to be appearing on the latest candle right now. So I can't enter an up trade at the moment, even though there is a buy signal from super trend. The SAR indicator dots are also drawn below the chart. However, the zigzag indicator line is not on the last candlestick right now, so I'm not entering a trade. In this case, I just start switching between charts, looking for some suitable situation where I could enter a trade. Well, like here, for example. What do I see on this chart? There was a sell signal and it is active. Here, a red line is being drawn. Then the SAR indicator shows dots above the chart, and at the moment of entering the trade, the zigzag indicator was on the last candle. Now it has moved to the next candle. Therefore, in principle, I entered the trade correctly here. I opened the trade for 1 minute, and I remind you that my trade amount is $300. Now, a couple of words about the trade amount. In general, regardless of which various indicators I use. I always follow one simple rule. I do not open trades for an amount that exceeds 1% of my balance. In my case, $300 is approximately the maximum amount for which I can open trades. Why? Let me explain. Sometimes my trades close at a loss. Quite often, my trades end up in the negative, and that's a normal part of my job. And if my trade closes at a loss, then I want to somehow manage the losses. For example, I got caught in a small rebound, and because of this, my trade closed at a loss. What do I do in this case? I simply enter a double trade amount here. So the next trade I open will not be for $300, but for $600. I'm switching back to search mode for some suitable chart. So as soon as I find a suitable chart, I will immediately enter into a $600 trade. If the trade for $600 ends in profit, I will recover the loss from the previous trade and gain a small net profit. But if my trade for $600 ends in loss, I will simply make the next trade for $1,200. And here, it becomes clear why I use a very small amount at the beginning, namely, an amount that does not exceed 1% of my balance, because in this case, I have many chances to cover. So, for example, my first trade for $300 ended in a loss. Then I can open a trade for $600, then for $1,200, then for $2,400, and so on. I have many attempts, and to have such a number of attempts, I use $300 again in my case, which is quite a small amount if you look at my balance overall. So, a $600 down trade is open. Basically, there was a pretty good moment to enter a down trade here. There is an active sell signal from the super trend indicator. Then zigzag draws a line directed downward, and this line is on the last candle, and the SAR indicator dots are above the chart. A few seconds remain, and my trade closes in profit. Here, I've recovered the loss from the previous trade and made a little extra on top. What do I do in this situation? If, for instance, my series of doubling finished with profit, then I return to the original trade amount. So here, I can get back $300. What do I do now? Well, I don't really want to enter a down trade again. I'll try to find a moment where I can enter an up trade to show how it works. And right away, I find such a chart. Here on the currency pair Australian dollar and Swiss franc, there is a very good upward movement. I hope it doesn't end just now and I don't face a correction, because the price has really gone up sharply. After such sharp price jumps, corrections often happen, so this trade could close at a loss. But again, I'm okay with this, and if anything happens, I'll just cover it with a doubled amount. Here, I'll try to explain why I entered an up trade with a clear example. Here it is, the buy signal is active. The green line is still being drawn, the SAR indicator is placing its dots below the chart, and the zigzag indicator was on the last candle at the time of entering the trade. Therefore, I entered an up trade again for 1 minute. What I like about this strategy is that I can very quickly determine if I can enter trades right now or not. Since all indicators are on the chart, I can very quickly determine whether the current situation is suitable for entering a trade or not. So, my trade closed in the profit. That means there's no point in doubling here. So I'm going to return $300, and with that, I'll be wrapping up my video. I hope you enjoyed it. I hope you found something new, maybe some new indicators or some new knowledge. If that's the case, don't forget to subscribe to my channel and give a thumbs up. Since I don't sell anything on my channel, all I have is this YouTube channel, the best way to thank me is by being active with likes and subscriptions. Also, friends, I remind you that on my channel, all I do is share my personal experience. I do not give financial advice. With that, I'll say goodbye. Wish you good luck.